All right, Matt, let's take a quick look at the mortgage rates outlooks in terms of, we take a look at this every month. Our source there is Wawa. We're looking across 10 lenders, and we have seen, some slight decreases there in various categories. I'm almost surprised to see the 7 basis points in the 5-year fix there, because the last time I looked, I saw a slight uptick in those. So it's interesting to see where they are now. But overall, looking at 4.41, again, this is up from earlier in the year when we were lucky in the springtime. There were some points where we were sub 4 for the most part. Is that something that you recall as well when we were taking a look at that? Especially, everybody's happy about these Bank of Canada cuts, but most people tend to go fixed when they're buying homes. And we've actually seen even an increase in this year. And that to me would explain why we've got more people sitting on the sidelines. We had Nicole on a few weeks ago, and she talked about, I'm so swamped with getting approvals in and meeting with people. We looking here at one of our kind of like leading indicators, but we haven't really seen that flow through to the buy side and to the actual sales activity. And I'm wondering if some people are still getting, like you said, some of that, not payment shock, because maybe they're not there yet, but nonetheless seeing those increases in terms of what their carrying costs might be.
Yeah, they're seeing the increases on that. Now that we talk about that, reminds me as well from the conversation with Nicole, is like a lot of people are dumping credit card and line of credit debt and car payment debt onto their mortgages as well. So that's that creates a little bit of an extra amount that people are putting on there. Could save them some money if they're paying a lower interest rate, but I think it's affecting how much they're spending on a monthly basis. But we are moving in the right direction across the board. The average rates are definitely higher than what you can get out there. That's for sure. But just looking across the board over the 30-day change, it does look like the 5-year variable is starting to be a lot more attractive now.
Yeah, it's getting there. It's definitely getting there, which is great to see. And you're right. Again, because we're talking averages across 10 lenders, you can still beat these rates. And again, if you reach out to Nicole, she will likely beat these rates. She's the first person to tell you that it's not all rate based, but I do promise you that she has beat the rates before for our clients, what they were being offered directly from their banks, and it made them very happy. So it's not a bad thing to go through a fantastic broker like Nicole. She will remind you there are things that are very important in your mortgage beyond the rate as well. Taking a look at the outlook in terms of the Bank of Canada. And so this is the top one is where we were on September 15th before the cut actually happened. And we were looking at 68% chance that they were going to make that cut down to 2.5. Now, as we look at October here for what's coming up now, still it's 50-50. It's looking more that there's going to be a hold in October. Some of the headlines have said so as well. It's great to see the data reflecting that. And then much more so that we do get one more still by the end of the year, but it will likely come in December, where we're looking at a 75% chance that we drop another quarter point. Anything as you were looking at this, Matt? Yeah.
I wasn't expecting it. If you'd asked me a month ago that we'd be this close for September or for October for a rate cut. But ultimately, I think from what we've kind of discussed earlier, it's going to be a close call. And with the Bank of New Zealand cutting 50 basis points, this is definitely something to keep an eye on. Whereas this might get pulled forward and we may get a rate cut for this month because, the Bank of New Zealand's basically come out and said, well, we need to get rates down quicker. So it might move them.
Yeah. Be interesting to see. And then outlook currently for next year is that we don't hit that 2%, that we stay at 2.25. Whether that happens, at the end of the year, or we get it next month, it'll likely stay at the 2.25% currently. That can change as it has throughout the year.
And if you go back, the interesting thing about this chart is that what is that? June is the highest chance of another rate cut at 34%. But then after that, the chances of it potentially staying at 2.25 or going higher start to kick in.
Yeah.
And this is something we've seen for a while. All the data has told us that at some point next year, the rate cutting cycle will be over, so they say, and we'll start to move to the higher side. But based on everything we're seeing with the Bank of Canada potentially changing the way that they view inflation and stuff like that, that'll be interesting to see if that remains the case.
Yeah, well said. Yeah, let's just leave it at that. The thing that I want to get off my tongue is they can't just find a happy space for us to sit where things are stable. It's up, down, is a lot of what's been going on. So anyway.
It's terrible because businesses want they want a clear guide and a clear path of what's going to happen and what's going on, so that you can make investments in your business so to be prosperous in the future. And it's been so up, down, sideways, this, that it's hard to do business when you don't have a clear path going forward of what it's going to look like.
Yeah. Let's stop playing. Let's stop changing the rules of the game. Stick with some stability here.